Good morning, everybody. Welcome to Business Mastery Live Wednesdays. Good to be with you today. It is Wednesday, June 21st, and I'm excited to be with you this morning. We're going to be on a short call talking about your business and how to improve it, how to be more efficient at it, how to optimize it, how to get more out of it today. And specifically, we're going to be talking about taxes, keeping your money. And talk about keeping your hard-earned money a little bit today. All right. So let's get started. This is me, Cheston Baldwin, By the Books Consulting, senior consultant over here. This is how you reach us: 888-4BTB now. All right, and you can also go online at youraccountingsuperhero.com or at bythebooksconsultants.com. And we do the accounting, QuickBooks, some of the technology that you would use to run your business. We help you with that. We also do tax strategy, tax services, and operations consulting. Okay. So the things that we're up to over here in this group are letting you in on some information, some tactics, some tips, some strategies in order to make sure that you're not only set up to sustain your business, but to actually thrive and do really well inside of what you do. Okay. So that's what we do here. And real quick, let's just go over the foundation of what we're about inside of this group. We do this every week. Okay. And before we get into that, let's talk about this disclaimer. All right, the following is for educational purposes only and is not to be considered financial, accounting, or legal advice. Please consult your tax, accounting, and or legal professional for specific advice. All right, so of course, if you want to add to this conversation, you want to forward this conversation, you can do that by reaching out to us at any of these means. This is me directly. You can reach out to me via email, cheston@bythebooksconsultants.com. You can also hit me on IG at Your Accounting Superhero or on LinkedIn at Your Accounting Superhero. All right, so 10-figure business mastery. What is this thing about? Okay, really, it's about achieving freedom, wealth, and legacy as an entrepreneur. That's what this is about. And inside this group, we're talking about, we're founded rather on four things. Number one, it's intentionality, which is mindset mastery. 2, it's financial mastery, which is also financial literacy. 3, structures and system mastery. And then last but not least is actions, which is execution mastery. We have all these things in line with our business and we win. All right. So this is where you want to look. Right now, it might seem conceptual, like mindset mastery. What is that? You know, when we have intentional thinking, there's a focus that's present that otherwise would not be. All right, something that's needed to do what you do at a high level is a level of focus. All right, so what does the focus look like? It means that I'm here to achieve something specific, and anything that aligns with that, anything that actually goes along with me achieving that, is what I am focused on. This is what I put my attention toward. Anything that is not that, I don't allow myself to get distracted. This is mindset mastery. Now, a lot of the times it happens on the inside, like our thoughts, like what we allow ourselves to entertain. And once we get mastery over that, then we can actually do the job at a high level. Like, what are you allowing yourself to entertain mentally? Okay, what is it that you're really focused on? Are you distracted by your own thoughts? Are you distracted by other things? Really take a look and then bring it back into focus. What are you here for? What are you here to do? Okay. Financial mastery is a conversation that we're in today. It really does deal with that number story, which is the language of business. Um, if you're not really good at this, then you want to get good at the number story. At least have fundamentals to understand what it means to run your business and generate a profit. Like what those numbers mean. Where is the flow of it going to? Where is it coming from? How is it that you can be more efficient with the management of this? All right. A lot of times, if you're looking at the numbers at a superficial level, you're not going to get access to the very things that you need to get access to take your company to another level. Okay. But the more you're able to read into this, it's just like anything that you learn how to do in reading or whatever it is. There are levels to this. Okay. And there is a level of mastery that's attainable inside of financial literacy and understanding how to be inside of integrity when it comes to managing your finances and business. This is a lifelong practice of mastery in this area. Okay. There's always levels that we can attain that are more so than where we are right now inside of this. All right. So structures and system mastery. Now, leverage is a big thing inside of business and in life. How can we do more with less is really what this is. How can we do more with less? How can we make sure that I fulfill on the things that I say I'm going to fulfill on and do it at a high degree? It's going to take this system mastery. Okay. And then, of course, actions. Nothing else matters until we execute. Right. When the rubber meets the road, when we actually go out here day to day and do what we say, this is what makes the difference. Everything else is moot without the actions. All right. So these are our principles. All right. So we're driving business forward in 2023, and we're halfway through the year, people. Woo! Halfway through the year. Come on now. All right. So are you doing what you said that you were going to do in 2023? Are you actually performing in your business the way that you said you would perform? These are the questions you want to be asking, especially right now. And we mostly have been talking about structures. Today, we're going to talk more so about keeping your money. Okay. Now, this is an older presentation that we talked about earlier in the week, and we talked about structures in terms of how you set up. Do you have an LLC? Most people do. Most business owners, they decide to go out and create an LLC. It is the popular thing, even though LLCs are the more recent structures that we've created in business. And the reason for this is more so protection. All right, this is one of the ways you keep your money is to make sure you're protected from all of your, lenders and people that would come after you in case there was a liability inside of your business, right? So that shields you personally from the business liabilities. Is how I want to put that. Okay. LLCs, and then we see here on this slide. And again, I don't want to be redundant because you can watch the earlier videos we talked about this. But we have on this slide disregarded entity for LLC because there is no specific tax treatment of an LLC. It doesn't have anything in terms of like what the IRS would want to look at for tax reasons. Now, what happens is there's a way that this is formed underneath, like the body of it, underneath the LLC, that underneath that veil of protection, it's either going to be one individual who owns this LLC or it's going to be multiple. These are the options that we have. And depending on how that is how it's going to be treated tax-wise. So that's what it means to be disregarded. They're not really looking at the veil of the LLC. They look underneath that veil and see how it is structured in terms of how many owners does it have. And then it's going to be treated a certain way based on that. All right. And hopefully that makes sense. So there's some times are confusion. Sometimes there's confusion about what it is that you need to do for your taxes when you have an LLC. Well, how do I file my business taxes when I have an LLC? Well, that's an interesting question to ask when you think about it, because if you have an LLC, that doesn't mean anything when it comes to taxes. How are you really structured? Are you a sole proprietor underneath that, which means you're a single member LLC, or are you a partnership, which means you're a multi-member LLC? Now, the other thing is that you get to choose how you want to be treated tax-wise, regardless of how many owners you have. That is another option that's available. Okay, sometimes people don't know the options that are available to be treated a certain way when it comes to taxes when you have an LLC. What do I mean? Well, you can be treated as a corporation because the LLC has no real designation when it comes to taxes. You can exercise the right to be treated as a corporation instead. S corp or C corp even. You can choose that. And why would you do that? Why wouldn't you just get started as one of these entities from the jump instead of doing an LLC? Well, LLCs are, this is what I see, okay? The flexibility inside of an LLC allows you to actually get things done pretty simply, okay? And then afterward, you can figure things out, is what I want to say, right? It doesn't lock you into anything specifically. So it does provide that flexibility that's there. That's one of the more attractive things about being an LLC. You can get started in business right away and then figure things out as you go. You can get started single member LLC and you're just doing, regular small numbers in your business. And it makes sense for you to do that because you're not doing a whole lot of volume. You don't have a whole lot of tax liability. So it doesn't make sense for you to do anything else with that for tax reasons. More so, you're doing it to make sure that your family is protected if anything happens with your business, which is smart, right? Not only do you have the liability insurance, but you have that limited liability protection through the LLC structure if you're running it like a business, okay? And that is the purpose of that. But when it comes to taxes, right? I mean, you can get started and just figure that out, how you want to be treated later on. Now, you really do want to, like, that's not really fostering the behavior that we want, in a sense. When you start a business, you really want to get to know how you're going to run that business from the start, so you can see down the line, well, this is going to be the strategy for us overall. This is how we're going to approach our business. This is how we're going to make sure we're keeping more of our money at this stage of the game, because we realize we're going to make this type of money in the beginning. We might make more later. So yeah, it doesn't make sense to do an LLC right now, because I will convert it at some other time in the future when we start profiting enough to warrant us doing that extra return, which is another cost to consider when you switch up how you're being treated as an LLC. Okay, an extra return, extra administrative costs that are associated with being treated differently tax wise. And there's a cost benefit analysis you want to do. Okay, now this conversation today, basically, I wanted to really get into the philosophy of this thing. You want to have a winning mindset when it comes to playing this game called business, like in keeping your money. All right. So this is what we really want out of the conversation today. Boom. So let's go. Let's actually take a look at this. All right. So what I want to share with you guys. And really, before we even get into this thing here, keeping hard earned money as an entrepreneur. Some people are really good at going out here and creating income. I've never been like super like fantastic at generating income like marketing and sales. I had to work at that for a while to get good at that, to generate consistent income as a business owner. But I always knew these things. Like if I made money, I knew how to make sure I keep it. That was my forte, man. Like if I made it, I'm keeping it, right? I'm not gonna let people just have it like for nothing. And a lot of the times when you're smaller and you're not making a whole lot of money, it doesn't make sense to have all these complex strategies in place. It just costs more to do these strategies than you're actually saving. But it is kind of cool to play this game called keep your hard-earned money as an entrepreneur. All right. So now, from an income perspective, all right, we're talking about the earned income perspective of this. A couple of things that you want to know. Income types. Okay. Breaks down into two real categories, right? Two like general categories. You have earned income Then we have passive income or non-earned income. And these are the difference between the two is that one, I have to trade my time and like for service, I perform services in order to get paid. This is earned income. And then passive income means that I'm not really trading my time for it. I'm not like providing a service for it. It's just money that I get regardless of that. This is passive income. So let's go back to earned income. Income, we think about this. So I go work for a company. So they hire me to perform services for the company. I have to go and earn this money every day. I'm putting my work, putting the time in, right, providing the service for that company as a W-2 employee. That is earned income. Now, the same thing is true when I start a business and I say, I'm going to perform this service for my customers. All right. Well, now I'm on the hook for doing a job. I'm doing this. I'm earning this money. Okay. And that is earned income. All right. Two sides of that. I can do it as an employee. I can do it as a business owner. Okay. Now, the thing about earned income is that it's comprised of two things. Okay. I'm just going to go over here, earned income, talk about this a little bit more. Yeah. Sorry, guys, we'll watch my typing here real quick. Okay. So number one, there's, which we have ordinary income tax. This is ordinary income tax. Okay. So this is federal income tax, federal withholdings. Everybody is subject to this, right? Everybody gets this, no matter what income source it is, whether it's earned or passive. This is going to be something that we need to deal with. Okay, on federal level and state level, this is ordinary income tax. Okay, and sometimes even on the local level, depending on where you are. All right, number two, there's something called FICA. FICA is like a Social Security insurance program established in the 30s to make sure that that people can have some type of money when they retire, or benefits when they retire, or benefits otherwise when they're not able to work any longer. Okay, so this is what we call another thing we call this is self-employment, or Social Security and Medicare. Okay, now we can talk about how this translates to business. I almost went there just now, but I want to make sure that this is distinct. Okay. So FICA, if you can imagine this, you go to your job, you get a paycheck. If you're not an entrepreneur, if you've ever worked a job, if in this room, or even if you're a business owner, you're paying your people, you see this on both sides of it. But as an employee, you might not see both sides of it. If you have a wage as a W-2 employee and you're getting the paycheck, well, you see the Social Security and Medicare come out of your paycheck. That first 140, I believe it's 147,000, right, off the bat. Kind of keep mixing up that number. $147,000 of income is subjected to Social Security tax, right? And then there's the other taxes, Medicare tax, that comes out of your paycheck, right? This is different than your ordinary income tax, which is federal withholdings. Now, the thing is, when you get this taken out as an employee, this FICA tax, this Social Security and Medicare tax, you only see like half of that because you pay one half, the employer pays the other half of that, pay into this pot for retirement and benefits. Okay. Now, if you're the employer, you're paying, one half, and you make sure that the employee's half is collected so that their half and your half gets sent to the authorities to comply with this thing. All right, hopefully that makes sense so far. Okay, so this is something that's separate than this ordinary income tax. Now, what happens when that employee and employer are the same person? So this happens when you are a self-employed individual. You're still using earned income. So The government really wants, that total amount, regardless, right? The employer side and the employee side of that earned income. Now, if you are one and the same, they call that self-employment tax. Okay. So that's called self-employment tax. All right. Now, this is specifically associated with earned income, self-employment tax. All right, this is an addition. And if you're paying both sides of that, this is 15.3% is what that is. Okay. In addition to the regular tax. Okay. Now, if you understand this, it's like, oh, that's earned income. Well, how can I reduce that? Earned income. I don't want to show that so much if I'm a business owner. If I understand how to play this game, I'd rather have passive income, because the thing about passive income, if you look at passive income, only, you just have the ordinary income tax for the most part. I mean, if you sell off assets with capital gains and everything that we deal with on the other side of that, but if you have income that's coming in, no matter what, you're not really selling off assets. Well, you're just subject to this one thing. There's no self-employment tax. You're not earning that income. It's just there, whether you get up in the morning or not. How does that work? Okay, so, and I'm going to make sure we focus here on this one particular thing, because this has the biggest impact on a lot of business owners. Managing the self-employment tax. How do we manage this thing? Okay. Well, as a sole proprietor, we talked about single member LLCs. If you're that, even if you're a multi-member LLC, you're dealing with this earned income thing, because you're going out there and you're actually performing services, you're earning the income. So there's that self-employment tax factor that we have to consider. Now, if you play the game, you understand how to play this game well. Well, you're thinking, well, how can I actually reduce my exposure to that? Well, I need to convert this to passive income. Well, how can I do that if I'm actually providing service? Well, you can get compensated as an employee of your business. In certain structures, you can get compensated as an employee of your business. And then the rest of the income from the business, you say, that's the business's income. That's not my income. But I'm a shareholder of that. So it's considered to be passive. Structures like that, the structure that really gets that done is an S Corp structure. I was just looking at one of our clients that has an S Corp, and we're working this thing out to make sure that they're, compliant with paying themselves enough of the earned income portion of what they need to get paid through their business, so that the rest of it can be passive income, the profits of that business, right? So the major difference is that if I don't have a structure in a way that limits the amount of exposure I have to this, then all the money that I make as a business owner, every piece of profit that I make, not necessarily the overall revenue, but the profit, the money that's net profit, is subjected to this self-employment tax. Okay, so if you make $100,000, right? Let's say you brought in, $500,000, right? And then at the end of the day, you're able to profit $100,000 as a business owner, right? Well, that $100,000, you're going to pay ordinary income tax on that $100,000. Somewhere in the, as far as your ordinary income tax, you're going to pay somewhere in the $30,000 mark is what it's going to be for your earned income liability. If you're, depending on your tax profile, if you're married versus single and head of household, whatever that looks like for you. All right. Somewhere around $30,000 for ordinary income tax. But in addition to that, you're going to end up having another $15,300 in self-employment tax. So that's like 45 grand, right? That you can consider. Now, what if you structured yourself differently and said, well, I don't want to have this, a whole $100,000 of money that's subjected to, self-employment tax. Well, what I need to do is make sure I have a structure in place where I can reduce that. And usually that's an S Corp structure. S Corp structure will allow you to just take a wage, right? W-2 wage, take a paycheck. Let's say You take that paycheck and make that paycheck $40,000, right? Which is a requirement for you to take a reasonable wage as an S corp owner, like owner compensation, reasonable wage. Let's say your reasonable wage is $40,000. Now that leaves you with 60,000 in profit, right? That would otherwise have been subject to self-employment tax that is no longer subject to that. So, in a nutshell, you could save, like, just that one thing alone saved you maybe about $9,000 by doing that in taxes. $9,000 that you would have had to pay extra had you not made this choice to switch up, right? And all you did was fill out paperwork to do this and start, complying with it, like by paying yourself a wage and then doing your annual reports, and you file that extra return, right? So, with that being said, this is part of getting into the mindset of the game. Okay, well, what is it that I'm doing in my business to make sure I'm not putting myself at risk of overexposure to these things that I don't have to? Okay, this is on the deduction side. Okay, and making sure that I'm not having my income subjected to things that I don't want it to have subject to when it comes to taxes. Okay, this is one of those things that we want to have in our mindset when we're playing this game. Well, how can I do more of this is what we want to ask ourselves. What other things are available to me? And this is just one thing. All right, this is just one thing. There's so many available to us, right? But now when I make that switch, well, what else can I do? Okay, like, man, well, you got to think about it in terms like this. If we have a basic understanding of how um, the IRS thinks, or the tax entity thinks, right? Taxing entities, rather. Then we can start um, getting into that mind of our, how do we say, know your enemy. That's one of the things we have over here. Know your enemy, right? Understand how they think, understand how they operate. If we can start understanding how they operate, then we can start playing this game on a high level, okay? And understand all these strategies and nuances based on the philosophy of how they think. They really, taxes, the way it's structured, I mean, it just motivates you and I to behave in certain ways. That's really what the tax code does. It motivates you and I to behave in certain ways. Now, if we understand the behavior, I got no problems. Like, switching it to an S corp is no thing for me. It's the same thing as running a business. I just don't have to pay as much in taxes. That's basically the simplicity of it to me. I just need to, I'll pay myself a wage, and everything else will keep running like a business the way it's intended anyway. But I just get to keep more of the money at the end of the day, right? By behaving that way. So the behavior is, get a W-2 in there somewhere. I want to see a W-2, right, to make sure this is taken care of throughout the year. It makes it a lot simpler for the taxing authorities to collect their money, because now every period they're collecting our money throughout the year. Whereas a lot of business owners, they just keep going and making their money. They don't know how much they're making. They're not paying their quarterlies, and all these complications with the small business owners. Whereas if I get on a payroll, well, they can expect to have their money consistently and reliably. So this is a psychology we want to understand. The other thing about the psychology is that, there's certain things that we do in business that the government wants to encourage, like hiring people and getting more W-2 wage earners. If there's more W-2 wage earners out here in the country, then there's more tax collection available on a consistent and reliable basis, like whether you're paying them every week, bi-weekly, monthly, whatever that looks like. There's more consistency in the government being able to collect funds, which is why they want to incentivize you having employees. So much so that there are tax credits for certain ones, like people that would not be able to get employment otherwise. People that have been in the system, and not really collecting paychecks, but really collecting government assistance instead. So you hire these people, then there are tax credits available for that. Right. So getting to know your enemy is funny, because they're not necessarily the enemy. Right? It just makes sense. We are our own people. Like, the government is just us. We're governed by ourselves, if you think about it. Right? These rules are put into place so that we are encouraged to do things that enhance our country, right, and the citizens of it. So if we understand what those things are, if we read into it, then we can start playing this game and be able to keep more money in our pocket as business owners, right? There is no other place that you would rather be than on this side of the equation. Like on this side, meaning you want to be an entrepreneur because there's so much more things available when it comes to being able to keep your money. You get to make as much as you want, right? And now that you make it, well, how is it that you're going to make sure that this is money you get to keep? All right, so this is the beginning of this conversation. That's going to be it for today. I'm hoping that this little tidbit of information it sparks you to think about how to approach business from a perspective of a high level game that you get to play, where you can actually start creating freedom, wealth, and legacy through tax strategy, understanding how to keep more of your hard earned money. Okay, and structures is one of these things, right? But the main thing that you want to understand about the income sources and making sure that you're able to keep the income that you make, the two different brackets of this and where you want to be. Earned income versus passive income. Okay. And then now the other thing that we're going to talk about later on is we're going to start talking about deductions. Deductions and what they look like. And even though it's a deduction, how you can still keep the money and deduct it at the same time. Man, there are ways to do that. Yes, there are ways to do that. You can claim the deduction, but you still have the money. Ooh, man, wouldn't that be fantastic? I deducted it, but I still have it. Yeah, there are ways to do that legally. All right. So I will see you next week. Definitely a pleasure being with you all. And if you need anything, you know how to reach us. All right. 888-4BTB now. Looking forward to having this conversation next week. Take care, guys, and talk to you soon.